Accrued liability. So an expense incurred but not yet paid for by a business is called the accrued liability. Like you have to pay this in the future. Then accrued liability are the liabilities that reflect expenses that have not yet been paid or logged under accounts payable during an accounting period. In other words, it is a company obligation to pay for the goods and the services that have been provided for which invoices have not yet been received. So you can say all of the terms are used that are related to the future. Then, accrued liabilities. These three are the points that must include in it. Number one, any expenses incurred but not yet paid occur within a passage of time, often an adjusting entry like interest payable and salary payable. Second is debit expense or a credit accrued liability, interest payable and the salary payable. Third one is interest on notes payable example. Like long-term note, for example, $20,000 signed on June 1, interest is 6%, accrued 7-month interest. So this is again a payable thing, interest expense. We have to multiply by $20,000 with the 6% of interest and then by 7 by 12 because it's the 7 months. So then we can find out what is interest payable. So these are the examples of the accrued liabilities. Number one, future salaries. Number two, future interest payments. Number three, future taxes. Number four, services to be performed in the future. And number five is future lease payments. So these are the examples, and you can notice that in all of them the word future is used or yet to be paid. So accrued expense in for a journal entry. So for 31st March 2018, the debit is interest expense $10,000 and the credit is interest payable, that is $10,000. And for 5th April, again interest payable is debit is $10,000 and the bank is, that is credit, is $10,000. So this is a very easy example for all you guys to understand how can you enter accrued expense in your journal entry. Thank you.